Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about the most recent labor market report and how the unemployment rate has now risen to 4.4%. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, very expectedly, the unemployment rate has risen to 4.4%. I believe that, a couple of months ago, when they did not release the data, I believe I referenced a report from the Chicago Fed where they estimated that the unemployment rate back then was around 4.4%. So it's not really that surprising that it is 4.4. It just continues to go up. And one of the issues, as it relates to assets like Bitcoin in the short term, is that, Bitcoin is more in tune with, monetary policy and liquidity than I think the stock market is at times. Because the stock market has all these like passive flows through 401ks that can keep it elevated a lot longer. Bitcoin doesn't really have that in the same way. And so it's a little bit more sensitive. And, when you have a labor market report where the unemployment rate went up, but it still didn't go up a lot, but you couple that with non-farm payrolls that actually, this is private, but so the total non-farm private payrolls increased by 42,000. But if we go check out, let me see if I can find the other one. Maybe it's under the employment level here. You can see that it increased by about 119,000 or so. And it makes it difficult for the Fed to go into the December meeting with a clear cut in mind. Because the labor market, while it is absolutely starting to show signs of weakness, you cannot deny it, right? It absolutely is. You can look at so many different things. You can look at job openings. If you look at job openings, I mean, it's, we're at below pre-pandemic levels. If you look at hires, it's really low, right? I mean, it hasn't been updated, in a couple of months, but it's still, hires haven't been this low, except for this drop over here in June of 2024, haven't been this low since February or so of 2015. Maybe July 2015, sometime in 2015, really, you could argue, is how long it has been. 10 years ago, right? So hiring was at the same level 10 years ago that it is today. And quits, right? If you look at job quits rate, that continues to drop, meaning people are frankly afraid to leave their job because they're not convinced they're going to find a new one. So we have a situation here where the labor market is absolutely showing signs of weakness, right? Like, we cannot ignore it anymore, right? Like, it's there. The problem is, well, if it's weak, why is the Fed not cutting? Like, why are we going into the December meeting with a 60% chance that they hold here at 4%? Well, one of the reasons that's the case is because Jerome Powell came out at the last meeting and said as much. Said that, hey, a lot of people are thinking this is a foregone conclusion, but it's actually not. We might not cut at the December meeting. Furthermore, there's a risk that the Bank of Japan may raise rates at the December meeting. I don't know if they're going to or not. I haven't actually looked at it in the last few days, admittedly, but if you had looked at it a few months ago, a lot of economists thought that the Bank of Japan would raise rates before the end of the year, or maybe very early 2026 at the latest. And so that's also something that we have to contend with. So why are they not cutting, or why are they not giving more of an indication that they are going to cut, considering that the unemployment rate continues to trend higher? And a lot of us are biased, right? If you hold Bitcoin, it's like, well, yeah, they should cut because we want, we want them to pump the bags, right? We want them to pump our bags. But at the same time, the stock market is barely down, right? Like, it's down like 3% from the highs, And so this is one of those things where it's actually kind of similar to, you guessed it, 2019. How is it similar to 2019? Well, I'm glad you asked, because if you look at Bitcoin divided by, well, I divided by the wrong thing. But if you look at Bitcoin divided by the S&P 500, what you'll see is how it did this exact same thing in 2019, right? Bitcoin started to drop. It went to the 50-week, went below it, got a rally back up to the bull market support band, went lower, and that's kind of how it played out. It looks like the same thing's happening, right? Like it's rolling over against the S&P 500 after a relatively flat, non-euphoric top. A relatively flat, non-euphoric top. Bitcoin starts to show weakness, goes below its 50-week moving average against the S&P, potentially eventually gets a rally back up to it. That's probably a few weeks away, if we're being honest, maybe December, January timeframe. And then you could see it continuing to go lower. And one of the things that I've talked about as well is how if you kind of look at that low right there for Bitcoin, if you assume that we're kind of in that top, if you look at that low actually corresponds, Bitcoin is around $6,500, right? And we talked before about how Bitcoin was fighting to stay above 100K. Like over here, it was fighting to stay above 10K. You see that? And you can see that even after Bitcoin gave up 10K, it still occasionally rallied back up to it. So it's not impossible for Bitcoin to potentially rally back up to 100K at some point. But you can see that even if you exclude the pandemic drop, Bitcoin eventually dropped down to around 6,500 or so. The reason why that's interesting is because 6,500, 65,000 is probably where that 200-week moving average is going to be by mid next year, if I had to guess. If you look at like a price label on this, like right now it's like 55, but by May, you're looking at around 67 or so. By October, it's going to be 77. And I got to believe that we will have a date with destiny at some point, you know? I mean, it happened in in that cycle. It's sort of a few cycles ago. It happened last cycle or 2 cycles. It happened 3 cycles ago, 2 cycles ago. Last cycle we even went below it. We could go below it again. It'll probably happen this cycle as well, right? Like I don't have any reason to believe this time is different. It's probably going to happen. And so when you think about, the labor market and whatnot, and like why, like, you see all these good things happening for Bitcoin. You see all these companies that are buying. You see all this, this stuff with MicroStrategy and Saylor talking about buying. Like, what's going on? Really, it's the same exact thing that happened last cycle. I mean, if you look at MicroStrategy stock, is this not a carbon copy of what happened last cycle? I mean, look at the pattern. It's the same exact thing. I mean, even down to like these sort of secondary highs. It's almost the exact same thing. And so what I would argue is that MicroStrategy will likely have a bounce at some point, but my guess is that this cycle is over for MicroStrategy, right? Like whenever it gets a rally, it'll likely just be back up to the bull market support band. And what happened last cycle is it found a top in February of 2021, and then it found a low about 15 months later. So if you think about it in terms of that, and you look at like weekly candles, 65 weeks, how long has it been so far? Only at 52. To get to 65, that's going to put you out at least into February. And back then, not only did it go 65 weeks, it technically swept that low week 98. And week 98 puts you in October. And the reason why October is fascinating is because normally Bitcoin finds a top 1 year after the low or after the high, and the high is in October. So what if the cycle, the bear market is just from October to October? I think that's a completely viable path for Bitcoin. So that's kind of how I see things going right now. That's where the weakness is coming from for Bitcoin. It's the labor market. It's the inability for the Fed to cut rates. But what it really is, if we're being real with each other, it has nothing to do with any of that stuff. It has to do with the fact that this is what Bitcoin always does. It always tops in Q4 of the post-halving year, and then it goes down for a year, right? And we can blame the labor market. We can blame liquidity. We can blame whoever. But that's the way the cycle works. And right, that's the reason why it makes sense in general to fade all these narratives about why this time is different. You know, you can call it a super cycle or whatever you want to, but it doesn't mean that it's not just going to end up playing out the exact same way. So what I would say for Bitcoin is it'll likely, you know, it's going to likely come down maybe, and you can see back over here, it found a low before going below that low before, and then it rallied back up to the bull market support band. So maybe it does something similar, right? Like it drops and then it rallies back up, and then it kind of confirms the bear market and goes to the 200-week moving average. That seems like a viable path to me. It does. And the narrative, if you need one, is the fact that the Fed is strapped here. The labor market shows weakness, unemployment rates trending higher, but they cannot justify aggressive cutting right now because inflation is heading in the wrong direction, right? So inflation is heading higher. You can see it's been heading higher. And so that's why they're somewhat timid to cut. I'm not saying they should be. I mean, I do think there is a scenario where they could cut 50 basis points and get away with it. But I don't think they're going to. So at the end of the day, you have to trade the market that you have, not the market that you want, right? Everyone here probably wants Bitcoin to go to 200K. And it doesn't mean it won't eventually go there. But in the short term, we have to recognize that, hey, like, you know, there is a little bit of macro weakness right now. And it's likely due, if you need a narrative, it's likely due to the Fed's inability to cut rates too much more. The inability to really inject liquidity right now as much as they would like. Likely due to the fact that they cannot aggressively cut rates with inflation heading higher. So that's where we are right now. I think that those macro headwinds are going to persist into about mid-2026. And then I could see the narrative starting to change. But those are my views. That's your update on the labor market report. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.